Julia Boorstin is here. She's going to talk to us about what to watch this time around. And Julia, you are a very careful Disney watcher, so I trust what you're saying on this. What should we look out for?
Well, it's so interesting to look at what's happened to Disney stock. As you mentioned, up nearly 30% since its better than expected earnings in May. Now the focus is on streaming, which is the fastest growing part of Disney's profits, and also on its parks and experiences division, which is Disney's biggest driver of operating income. Now, the parks will be closely watched for commentary on the impact of tariffs and consumer spending trends. The wild card for the parks is the opening of Universal's Epic Universe in May. We'll see what the company says about that new competition. And it's been nearly 2 years since Disney announced it's investing $60 billion in its parks division over a decade. Morgan Stanley is now forecasting the division's operating income growth will accelerate to over 10% in fiscal 2026. Now, meanwhile, Disney's streaming business is going to be in focus on the heels of Disney completing the buyout of Comcast stake in Hulu, giving it full control, and ahead of the launch of its full ESPN streaming product, which is expected to come the next month. Now, MoffettNathanson with a buy rating on the stock, writing, quote, "The real upside for Disney shareholders will be once the company can provide a strong narrative for what elevated level of growth at direct-to-consumer is achievable and then continue to execute. Only then do we expect Disney shares to deliver a much greater premium multiple." Now, this quarter, analysts are looking for the addition of about 1.5 million Disney Plus subscribers. They're also watching to see whether ESPN announces a deal with the NFL in which the NFL and ESPN trade ownership stakes effectively.
Yeah, that's going to be so interesting. And I always wonder what the NFL's other partners think about that at that point. If you're dealing with somebody who's already in bed with one of your competitors, how much more complicated that makes
Well,
things.
the way it's structured will be fascinating, but I think what we're effectively seeing here is that instead of compensating with revenue, they're compensating with an equity stake. And we've seen so much about people getting paid in equity at tech companies. The question is whether they could do this kind of exchange at a media company.
Yeah, no question that Roger Goodell is kind of brilliant with how the structure is going for that. I'd rather get paid in stock, too, or in Bitcoin, right?
And their interests are aligned.
Are aligned with going through that. The other thing, though, I had forgotten that Universal's launch was over this past quarter. So that's going to be really something to see how that impacted the flow, at least to Orlando theme parks.
And look, there might have been more of a flow, in these sort of early days after launch to Universal's theme park. But the theory is that over time, anything that makes Orlando more of a destination
is good for everybody.
Is good for everyone. So we'll see whether there was a near-term impact.
Okay. And Julia, these results come out tomorrow, and I will see you tomorrow morning on Squawk.
I'll be there.
Okay. Look forward. It's a date.